Hi, Tavi. You're
Yeah,
good to go.
I think I am. I think
Yeah,
I,
you are. Now you're showing the 3 and 5 year yields.
yes, that's,
Okay, so let's start with this, Tavi. I read a little bit about your bio,
yeah,
and you were born and raised in Brazil.
correct,
Okay, and educated in St. Louis.
correct.
Is that correct? So
That's,
tell us a little bit about your journey and how you ended up being a money manager, advisor. I'm assuming Crestcat is a registered investment advisor. Am I correct?
yes, you're correct. Yes, we're a
Okay.
hedge
So
fund.
tell us how you got from point A to B.
Okay, so I moved here to the US about 10 years ago, right in the midst of the whole financial crisis in '08 or so. And then I came here to really to go to college. I was playing tennis, and I was recruited to play tennis in college here in Virginia at Liberty University.
Okay.
And then I moved to St. Louis to finish up college, and moved to Denver later on. And that's where I started my journey at Cresca Capital. And at Crescat, I really started as a kind of covering more of the emerging market side of things,
Okay.
and then moved on to global macro, and really helped to build not just the systematic models that we use to develop themes in general, but also a few of the narratives of investing themes that we've used throughout the years. One of them being China, a major one, and then that kind of moved on from there. And now I'm a global macro analyst, and I manage the portfolio alongside with Kevin Smith, or team is investment team is mostly both of us really and making the decisions, and
Okay.
so it's been quite the journey, but I've enjoyed a lot of this work in general.
Okay. I would just assume, having grown up in Brazil and surrounding countries around there, that you would have been pretty interested in currencies, the way they change colors in Argentina. You lived through some defaults, Brazil, the real going through devaluations, etc.
Yeah.
So we just lost your screen.
Oh, sorry.
So do you still have an interest, or did you have an interest in wanting to know how to protect yourself from devaluation of fiat, having grown up in an environment like that?
Absolutely. I mean, actually an interesting culture shock coming to the U.S. and seeing people that don't necessarily have lived through inflationary periods. And I lived
Yet.
through that for a long, long time. And any person who lived in South America had that issue. And Brazil was actually not as bad as other places in terms of getting to a hyperinflation, unless you're talking about the '90s, which I was really young, and but I remember my dad, struggling. He had a business at the time, and I think he bought a motorcycle once, not exactly on because he wanted to, but it was just a way of hiding from inflation. It was that bad, and I remember he made a great profit on that trade.
Okay.
But that's how insane, inflate those periods were in
Yeah.
Brazil, and now ours.
It's like the story of the Weimar Republic, right? You had a wheelbarrow full of Reichsmarks, and people would dump out the currency and steal the wheelbarrow.
Correct. Yeah. I mean,
Okay.
and investors in Brazil have been, very kind of a cheery on this entire, stock market in Brazil that continues to go higher. But, one of the best investments in Brazil has been just gold. Just hold gold and
Yeah.
in real terms, and you've done phenomenally well. So, I still think that that's kind of the case, especially what's happening in China. I think that, it's kind of hard to not see a scenario where China devalues significantly, and the Brazilian real, or the dollar in real terms doesn't go up as high as 5 or 6, on an exchange rate. So I think that that's all a very, very likely scenario to
Okay.
occur.
So you want to start off talking about rates and negative yielding investments and what's happening here with possible yield curve inversion, and you go ahead and tell us what you're thinking at Crescat and how you're positioning your portfolio to take advantage of what you're seeing.
Yeah, I'm happy to go through a few things. I have here a few of our macro themes as well. I can, yeah. Anyways, I'm happy to talk about them as we go, and whenever you want to stop me, I'll
Okay.
elaborate on whatever.
All right. Count on it.
Okay, sounds great. So, at Crescat now we have three high conviction themes, and one of them being the U.S., which we think it's more of a distortion of prices, asset prices in general, not just stocks, but corporate bonds and private equity deals in general are extremely overvalued, and even real estate, depending on the place, relative to fundamentals and some macro indicators as well. So that has been sort of one of the themes that we've been implementing in the portfolio by shorting the most overvalued U.S. equities. Then China.
What would they be? FANGs?
Some of them are things. A lot of them are software stocks that have been. I think I've tweeted this a few days ago about a few software stocks being trading. Medium software application software stocks now trading at 73 times free cash flow, and that's just that's just the median. You can look at the basket and just look at the most overvalued ones. There's some companies trading at very similar multiples than things like Beyond Meat. And some of them are actually legit companies. It's just like it goes to show how difficult it is for you today to find a good business with a good model. And any company that today has some sort of, let's say, subscription model with top line growth, Wall Street is valuing them at absurd levels. And there's very low cost to carry to short those positions, and those have been one of the major, I guess, places where we've been focusing on. It's a very expensive pocket of the market. There are more, that's not the FANG stocks are also, the Netflix of the world, and all those are also. But we use a quant model at Crescat that scores 1,000 stocks and globally. And so we search for the ones that have the lowest scores in that in those metrics of valuation and others of in general. And then we usually select a basket of those and hold them as we go. And and part of the investment process here is that if those scores start to rise, obviously that gives us attention, and we go back and see if we would like to still hold those positions on the short end, and if not, we can always swap with something else that is scoring bad. So that has been a way of for us of selecting a basket of the what we think are the worst.
How do you manage risk on short positions?
Well, we manage risk on a CVAR basis mostly, but obviously there's different ways. This is just one of the processes that we use is just bucketing or risk in general, or risk parameters through a CVAR constraints on a theme level. So let's say, and I think I have a good actually. Oh no, I don't have it here in this presentation, but essentially, let's say what we call this first theme that I said, the U.S. equities, for instance, that's what we call the maturing expansion here in the U.S. So that's where we put allocate most of our positions in the short end here in the U.S. And then we try to stay within our constraints of a CVAR, and how much ideally we would be down on a daily basis of those positions depending on the day. So it's that has been one way of managing risk, but obviously understanding the future correlations of asset classes that we own in the portfolio is another huge part, and which ones are the ones that are likely to act as more of a hedge, which I'm happy to elaborate more on that if you would like me to.
You're the captain.
Okay, so one thing we've seen in the markets today that has been an important development, as and I've been talking about this for a while now, is that, okay, well, inversions in the yield curve are extremely important, and they have been, credit markets have been acting as a bellwether for stocks for a long period of time. And one way we look at this at Kresge Capital is just calculating the percentage of inversions in the yield curve today. This chart is actually not updated, but as of yesterday, for instance, and I would love to open this file as soon as in an hour or so here. But I know that this number is even risen now. It's probably close to 75% of the yield curve today is inverted in the U.S., which is just as high as it was at the peak of the housing bubble and the tech bubble as well. So, when you think about inversions in general, yes, they're negative for the economy. But one of the things that tends to happen here is that if you go back to this chart initially here, which is inversions versus gold to the S&P 500 ratio. So the third chart there in this panel, or the third panel of this chart, you can see that relationship. And I think gold is really the best hedge of a shorts in the U.S. equities here, given how central banks are likely to provide even more liquidity going forward here to try to boost the economy in general. Maybe through another form of QE, but right now we're seeing through rate cuts. It's hard to see a scenario in which the business cycle doesn't turn completely without having a very large intervention by central banks, which I'm a truly believer that I truly believe that there's no way a central bank can prevent a business cycle from turning. I think that's another one of those. It's going to be different this time. Type of stories. So
they can delay it though, right?
They can delay, and that's the whole point of holding gold and versus S&P 500 ratio, which tends to do really well during periods like that. So as they start to really signal a more dovish stance in the following months or so, I mean, you should start seeing precious metals rise, and it's exactly what we've seen. Being, and at some point, this kind of nonsense belief that on equity markets in general, it starts to fade away, and then that's really when this ratio starts to rise even further. This ratio starts sometimes, it's the driver recently has been gold, but the driver of this could be stocks, as we've seen in other recessions. In other words, is stocks falling. So, and there's so many issues in the market today that could, you can easily come out with a very reasonable thesis of why you should be shorting stocks today.
How do you hold gold? Through the ETF GLD, through mining shares, through physical? How do you allocate a certain amount of equity to gold? In what form?
Yeah, so in order to stay in that CVAR constraint, we have to hold a very large position of gold itself, or in the futures, markets. And so that's been a large part of it. And then the other part would be another significant position on silver, also in the futures market. And then the third one would be a basket of mining stocks. The mining stocks have been in a bear market for about since 2011 or so, and some of those stocks are down like 80% from their peak. So it's it's a very interesting industry that we're very focused, especially on the first part of this move here in precious metals are likely to be, especially in the mining stocks. In our view, are going to the ones that are going to benefit from that are going to be the ones that have a very low EV to reserves, and that's the ones that we're focusing the most. They're the ones that are likely to be acquired by some companies, and also the ones that really hold those wonderful assets, for very cheap values, and a lot of them are trading below that EV. The reserves are value higher.
Can you define EV for our listeners, viewers?
Enterprise value.
Okay.
Yeah, sorry.
All right. And do you have a view on the gold-silver ratio, which recently has been as high as 93, now trading mid to upper 80s? Do you think there's going to be a reversion to the mean trade between gold and silver?
Yes, I do. And we hold in the portfolio as much silver as we can within our risk. But yeah, I firmly believe that that's the case. I think I've shown a very interesting chart of silver before. I don't think it's in this presentation. Silver versus Russell 3000 relationship, which is, or actually Russell 3000 versus silver, and it kind of formed this double top recently, with kind of retesting the 2000 insane valuation levels for stocks. It's just another way of looking at silver, how it has been historically depressed prices in general of silver. But silver is an interesting one because the first leg of the bull market in precious metals, and maybe the second too as well, is where silver can do really well. But you have to watch out, because if there is a truly a recession coming here, and the economy really turns south, not just in the US but globally, silver, as being a more industrial commodity, could definitely take a hit here in the following months too. But we still think that that's in the early developments of that. So we're still holding silver in a big way, and I do think that the silver to gold ratio, or the gold to silver ratio, is likely to drop significantly, maybe retest the medium levels. Yes.
Where would that be in your work?
Well, I don't have the ratio here in front of me right now. I actually
guesstimate.
Gosh, I don't want to estimate on that, because that's not a big
okay.
Of our. I'd rather estimate on the gold to S&P 500 ratio. For the next 2 to 3 years, I think that's reasonably reasonable. That we're probably going to go at least double that ratio. If that happens, obviously, I think silver, especially in the beginning of that move, is going to have a huge move or a huge advantage to that whole market development. So it's just we have silver, we have gold. We're not necessarily focusing on that ratio. We're focusing more on the precious metals to stocks ratio than anything else, just because it's it's a more way. I think it's the right way of finding a true defensive strategy for anyone's portfolio, in our view, at least.
Okay. Next.
So, another way of looking at precious metals is, this is actually was made by Increment and AG. It's one of the few charts here. They're not mine, but this is an incredible chart, and actually goes back a lot further. If you wanted to, it goes back to 1929, which shows how commodities to the S&P 500 ratio have been depressed for a long, long time, and this imbalance is really when it turns, and a lot of times is due to a commodities move, and other times is due to the equities part of it. We think it's going to be both this time, and just like was a tech bust and the Nifty 50 in 1972, and meaning that stocks are likely to drop significantly as the entire precious metal space should probably rise. But there are so many ways you can see that, especially on the nominal rates that create this great environment for precious metals. If you look at the 2-year or just nominal rates, 2-year yields all the way back to the 70s, and you connect the tops of the 2-year yields, and you start to see that you hit this resistance line and start dropping significantly, you're at the peak of a cycle, very clearly there in this chart. It's probably a must-watch, and everyone monitors, and not a lot of people pay attention to this. But if you believe that the 2-year yields are going to drop significantly, as I do, you would think that the real yields would also drop significantly. This is just looking at the relationship of real yields inverted on the blue line, and then the gold line is gold. So you can see very clearly that those two follow each other remarkably close. And if you're likely to see nominal yields dropping, real yields should drop. And in an inverted version, you would expect gold to follow on the upside here. So that's a major part of our gold thesis as well. Aside from just the levels of leverage, which shows here in this chart, the huge amounts of and this is not like more of a short-term way of looking at markets in general. This is more of a big macro picture of what's happening globally. Very clearly, you can see here that when you look at total debt to GDP ratios of the past largest credit bubbles we've had, all the way back to the 1990s, and the Asian crisis, and the housing bubble, even in the European debt crisis, you can see very clearly when you look at the average of the total debt to GDP ratio, we're somewhere close to 245%. Today, if you look at the top total debt to GDP ratios today, that average is significantly higher than that historical average. So, it's that's clearly an imbalance. And honestly, I mean, that's a huge part for why we think gold is likely to perform well, not just and perhaps will be a secular shift here for gold in general, which I think that there's no way all this money printing and amount of leverage we had in the system will have to translate into inflation at some point, and at least a value destruction of fiat currencies. And so but that's more of a big macro picture. The reason why you want to be long gold today is a lot more because of the today's macro imbalances that we're seeing. But here is I'm going to go back to the beginning of the presentation as I skipped a ton of it. But China is the second largest theme in our portfolio, which we think that China is a historic credit bubble, and probably the way that things are going to play out is that the yuan is likely to devalue. We even have another kind of what we call the currency crisis is when the equity market declines along with the currency market. And that's kind of what we saw in Argentina the other day, and it's what we see in a lot of other credit busts historically. But one thing that tends to happen here is that gold in local currency terms tends to do really well during credit bust. And one of our major positions in portfolio today is being long gold in renminbi terms. I think that that's probably I understand it's a more sophisticated type of investment, and not a lot of people are able to do it. I need is the agreement and blah blah blah. But the idea being, if China really is this huge historic bubble in terms of its credit imbalances, you would expect that an implosion would cause the price of precious metals in local currency terms to rise, just like we saw in Turkey, like we saw in Brazil, in Argentina, and in any place that blew up significantly. Tends to happen, especially emerging markets. That's a very important.
Would you say China's a little bit more prepared for it than the other countries you mentioned, since they've been the biggest buyer of gold on the planet?
Sure. I mean, that's just driving gold higher in their local currency terms, right? So that doesn't mean necessarily they're being prepared. They're massively short the dollar, and I think that's going to be the problem. I think that's a $45 trillion banking system can never be fully prepared for a credit bust. That's for me, that's the bottom line. I've never seen a country that had that much leverage in the system. That's just on balance sheet assets. I mean, if you include off balance sheet, you're talking about another $40 trillion of assets. So I don't think that that's going to unwind. There's not going to be a soft landing scenario here, in my opinion.
Okay, so let me ask you, do you have any kind of levels? We recently cracked the 7 level in US dollar yuan. Do you think we could go to 8 or 9 or?
I do think that it's usually in average this imbalances tend to when they occur, as I said, you don't know which one it plays out. Is that the currency or the equity market? In this case, we're playing both because it's so easy to get an option on or play on the derivative sides of the currency itself, meaning the CNH or the Hong Kong dollar. So I think that it's plausible to come up with at least a 30% devaluation of the yuan in order to come back to more normal levels in terms of, especially of its M2 money supply versus its GDP, as we've shown before, the way we value the currency. But
do you short Chinese stocks because of this? How are you going to take advantage of China's blow up because of credit and debt to GDP?
So a large part is being
gold
on the currency side. A large part is being, being long gold in renminbi terms, and the third part is is being short the most overvalued companies in China. When I say that, I'm not talking about the A shares that are trading at low levels, supposedly according to their fundamentals that have been reported. I'm talking about things like, the ones that had IPOs in the US, like the Alibabas of the world, that are extremely overvalued. And it's just, if you agree in that term that we're going to have a credit bust in China, there's no way those companies are going to be valued where they are today. So that's really our view, and that's the third part is being short the Hong Kong dollar. I mean, it's the cheapest trade you can find. Well,
because that peg is held forever till the last month or so, right?
Well, it's still pegged, and you're right. It's being held forever. Like in the Asian crisis, for instance, that peg they never depegged, even though they had a credit bust. So what happened there was very clearly the equity market took the pain, and I believe Hong Kong stocks in average were down close to 60% or so during that period. So yeah, that was a very important part of playing that. So that's why, if you can find leverage to not get killed on one of those three positions, let's say on the China credit bust, let's say you don't get killed on equity markets going a lot higher, and that kind of offsets your gains on unfortunately on your currency play. I think that's the key, and I think we're that's where the derivatives part of it plays a big part of how to position those in the portfolio. But so far,
talking about getting killed, do you think that mainland China is they're massing troops, they're going to go into Hong Kong and pull a Tiananmen Square in Hong Kong?
I think, as a money manager, I'm just looking at the probability of those things happening. I think the probability of that is very high.
What if they do that? Then Taiwan is next.
It could be. I mean, Taiwan is hard to focus on because of there's not as much liquidity as even places like Hong Kong. But what could happen is obviously the depeg of the Hong Kong dollar and things like how do you sustain, like I was looking at just a secondary residential market in Hong Kong, which is not even the primary one. So, you're looking at 1,700 square feet, $1,700 per square feet valuations of real estate there. How do you sustain that? There's no way. And there's another part that is important too. Well, Hong Kong.
They should sell and move to a ghost city in China.
Yeah.
They'd have no neighbors. It'd be very quiet, right, Tavi?
That's right. But what's interesting about this too is that when you look at the banks in Hong Kong, and the amount of provisions of loan losses they're doing, their allowances on the income statement today as being, compared to, relative to the revenues. So let's just call it, I don't want to pick on one or two banks, but you can easily find banks, the largest banks in Hong Kong. I'm talking about the top four, that are provisioning close to like less than 4% of the revenues on loan losses. Do you know how much they used to do back in, not even in 08, just 06 and 07? I mean, those things.
20?
20 to 30%. When, that's.
They have no coverage now, do they? They're weak.
No, it's just, when those losses come, it's going to be ugly. So, the political crisis, what you ask about, will China really, possibly relent or really force themselves into a real political issue here in the following weeks? I think that the political power trumps the economic power, especially when you have a authoritarian and communist regime, and that's the case in China. So, obviously they will try to hold their political power as best as they can, regardless if that means that economic conditions, deteriorate caused by that. And obviously that's not a perfect scenario. I'm sure they're not.
But they're used to it.
Yeah, they're used to it.
Their population has gone through so much over the last 70 years as far as cultural revolution, etc., starvation, everything. So, you really want China to be your friend. If you don't believe that, ask MacArthur. So I have this question. As an RIA, what's the minimum amount of capital that your company accepts for your to manage an account, or are they funds? How do people get involved with you, Tavi?
Sure. So there are a few ways of doing that. Getting in contact, we have a website, crescat.net, or you
Okay.
can also get, on Twitter. You can message me on Twitter. I have an open message, so anybody can message me and talk about that. But what are the ways is, a person, if they're a accredited investor,
Okay.
minimum investment is 250K on the hedge funds. But we also we opened this other strategy, which is we've had the large cap strategy for a long time, which is a separate management account. So there's no minimum there, pretty much. I mean, there is a minimum there, but there's no minimum almost on the on.
You don't have to be accredited investor to be in that.
That's my point. But also,
Okay.
if you're in the precious metal account, which we open now as well, a separate strategy as well for just precious metals, mining stocks. In there, that idea was that we could at least be able to raise capital of people that are not accredited investors yet, and maybe help them to get there. So.
Right.
On that, you can invest as much as 20 grand. So it's actually very not too difficult to be an investor of Crescat today. So it's
So
fairly.
don't wait to buy gold. Buy gold and wait. Right, Tavi?
That's a good quote. I
I
like
got a
that.
million of them. Anyway, Tavi, it really was a pleasure meeting you. It's interesting to hear an RIA hedge fund guy, that has these kind of strategies that looking at the glass being half empty, because it is, not because you're pessimistic, but you're just looking at what you see, and encourage people to follow your writings, follow you on Twitter, and uh, you're now my trading warrior brother, Tavi.
Oh, thank you very much. I appreciate you having me. And if anything, I just want to say I'm not a perma bear, like you said. I think it's
Yeah.
reasonable to have that thesis today, given all this macro imbalances we're seeing. Just really a line of them. I mean, there's way too many that it's hard to ignore and just be long equities and trying to take the less juice of this market. So I fully. I agree with you there. So thank you for having me as well, and I hope
Oh,
we
you're
can.
very welcome, and may your returns expand and outperform the S&P tenfold. How about
Thank you.
that, buddy?
Thank you. I appreciate it. You as well.
All right. Thank you very much, everyone. So you could follow Tavi on Twitter. Here, I'll show his handle. Okay. His handle is right here. Come on. Okay. At Tavi Costa. At TAVICOSTA, and he has a link to his website there. So that's a wrap, everyone. Remember, don't just count your gold coins, count your blessings, and we'll see everyone tomorrow. Good hunting. Adios. And really appreciate Tavi taking time out of his day to be with us.
Thank you,
So,
Dale.
all
Appreciate it.
right, take it easy, buddy.
Bye.
That's a wrap. See everyone tomorrow. Adios.